Good afternoon, everyone. How's everybody doing today? There we go. Awesome. Let's see. Getting everything rigged up here a little bit. There we go. Hope everybody's having a good day. Market's still kind of pulling back a little bit. If you do a little, you just look at the chart I have here. This is the S&P futures. Um, on this contract, we have a high up there at that. You can see the little high up there at that 61, 66.50. If you take 10% off of that, that puts you down at 55.50, which you notice way down here, that's kind of where we're at. And so basically today we've finally hit that 10%. Yesterday we went down to 55.71. Today we went down to 55.55. And I was just like, surely they're going to hit that 55.50 or get past it a little bit. And they did. They finally kind of flushed it out. Basically, things really started getting kind of hit hard when Trump came out and said, well, we're going to put 50% tariffs on Canada on the steel and aluminum instead of 25%. So they didn't like that one. And so they've kind of pulled things down a little more. They've kind of ricocheted off that low, though. I mean, we have hit the 10%. And usually when the market corrects, it usually goes around 10 to 12%. Um, and so when we look at the 10, 12%, that puts us down around the 55.50 down to the 54.27 range and kind of go from there. And one thing I think is kind of interesting, if you go back, I don't know, 6 months, everybody knew that Trump was going to be putting tariffs on everything, and now the market's kind of wigging out about it. Really, I mean, come on. But they're using the excuse. I mean, we've been making all-time highs and stuff like this. And if you were, listening to me or anything like that back in December into January, I was telling people, no, it wouldn't surprise me one bit they don't use the first quarter for it to go down and make some make some hefty lows. And usually when they do that, they'll usually use March, about the middle of March, where they'll find a bottom in there and start kind of flipping things back around. And right now we hit the 10%, and here we are getting into the middle of March, right? So, I mean, it wouldn't surprise me one bit that we don't see a little more down in this market. Maybe we get down to that 54, 27, 54, 30, whatever area. And then from there, we kind of see what it does from there. And see if it can bounce back up. Now, the horizontal lines you see on here, basically, I put a fib on here. So it'll probably be our first indication that we're flipping around once we get that above that, 23.6%, which is right around the 56.80 area. So if they can get back above that 56.80, 56.75, 56.80, we might be thinking, hey, they might be able to try to turn this thing back around. I mean, if you're going to wait for 50%, that's way up there around 58.50. So that's kind of a ways from here. But anyway, there it is. But let's just kind of see if they do try to ricochet it around here a little bit. They've had a pretty substantial little bounce off the low. They went down and hit that 55.35, and now we're 40 points off that thing. So we'll see if maybe they've kind of flushed it out enough. I don't know. But one day doesn't make a market. And I mean, that's one thing that I've been kind of encouraging people over the past couple of months, is just what we call pocket puts, and just buy some puts. And they're insurance. And if you can just, buy some insurance and see what happens, a lot of times it will pay you. I mean, I've got a portfolio of stocks just like most people do. But the thing is I might be getting hammered in those, but those puts are paying me big time. So I usually use the SPY. I usually go out a couple of months, and then I'll usually try to find something for around $5 or less. And I'll usually get, 4 or 5 of them, just say there. And once I get up, a couple of 100%, if it does tank off, take half of them off, and now you got a free ride and see what happens. And right now they're up about 350%. So with the market doing what it's doing, but that's the biggest thing is always trying to protect yourself somehow, or just giving yourself some cushion. I mean, if your portfolio is supposed to be down 10% and you're down 1%, you've done pretty good, right? So even if you're making money, you're done pretty good. So that's the thing about it. I mean, we've got a lot of different. I mean, there's so much news that's out there, trying to hard to keep up with things. They're now, trying to figure out the egg situation. Imagine that, right? So, but one thing that they are finding out is that they kind of went overboard on killing the chickens. I mean, they killed like what is it, 160 million uh, hens that lay eggs and broiler chickens. And basically, what they were doing was they were um, finding one chicken in the whole, flock there, and saying, "Well, we'll just kill them all, just in case." And that's basically what they did. So, which is kind of going overboard. And it takes about 8 months to get some chickens back. So now they're trying to scramble around and say, "Hey, does anybody have some eggs that we can borrow?" And right now they're looking over in Asia, trying to figure out if they can let go of a bunch of eggs. I know that Mexico grows a bunch of them, so I don't know if they're talking to them or not, or just putting tariffs on them. Who knows? But they're trying to figure out how to, get the eggs back and stuff like that. A lot of people know that's a pretty good main meal thing for them. But that's another thing that's kind of going on right now, kind of in the background. And so, I mean, when we start looking at, everything, I'm always trying to figure out, what the trends are and what the trends aren't are. And, when, all these tariffs and little fights going on with Canada and stuff like that. One thing about Canada, um, I mean, you look at, the price of lumber. In fact, if you haven't looked at the price of lumber, is that right? That should be right. Got the wrong. Oh, it's the wrong contract. Hold on. K5. That looks better. Um, so this is the price of lumber. And you can kind of see, since we've been threatening the tariffs and everything like that, lumber's been jumping up. And the main reason for that, we get a lot of lumber from Canada, A, but B, Canada owns most of the sawmills, right? Um, so the big thing is, when we start looking at a lot of everything, um, you know, are they going to be saying, "Well, we're just not going to, sell anything out of the sawmills here and everything like that"? So I'm kind of worried that we're going to see the price of lumber up. We already had the price of housing up, right? And we have property taxes that are way up. And of course, they're saying, "Hey, we're going to bring the price of, housing down and all this stuff." But we it's going to be hard to do that when we don't own the mills. And it's kind of the same thing with the refineries. We look at, energy. We've, destroyed basically 10, 12 refineries here over the past 7, 8 years. So we've cut our refining process for oil and everything like that down quite a bit. And that's kind of hurt us as well, even though we can produce all the oil that we want, all the natural gas that we want, blah, 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 blah. A lot of times we just export the oil and just have somebody else refine it. And just because we don't have the capacity here to refine everything that we do. And that's one thing that kind of hurts us as well. Now that we sold off a lot of our sawmills to everybody, well, you know, how's that going to help us out? And maybe we can, get things a little cheaper, or in what they're trying to do now is open up some more of the, national lands, national forest, whatever, to, lumber out and everything like that, which in a way, I don't have a problem with that, just because there's a lot of beetle kill, especially in the Rocky Mountains. And if they just culled out all those things, I mean, that, help forest fires tremendously, in my opinion. Instead of just letting them sit there and let lightning strike it and then burn down a whole mountain, why not use the lumber? So that's one thing that I think they're trying to look at as well, to do some more management in those areas. But um, when we look at the overall markets, I know a lot of people are no a lot of people are stressed out. I mean, when you see a chart like that on the S&P, that's not the, you know, nicest thing in the world to see. And, I mean, if you look at the NASDAQ, it's basically the exact same way. There you go. There it is. I mean, if you have been experienced in skiing, that's a nice little black slope right there. So, or a double diamond slope or whatever you want to call them. But that's the thing. Um, they're in a pretty steep decline. The Dow has been literally the strongest market of the year, and well, ah, no, I can't type very well today. Why? Um, so the TM, but you notice it kind of looks the same way. You notice here it's not just straight down. They kind of hovered in here for about a week, and they kind of went down. They kind of hovered in here, and then they kind of flushed out a little bit. So it's been the most resistant to going down. Yeah, it's the blue chips. A lot of people are getting out of the techie guys, going into more blue chip and consumer staples and stuff like that. And so they've actually kind of held up a little bit. And plus it only has 30 stocks in it. And the most expensive stock's what moves it the most. So it's kind of an odd one out when it comes to how it works. But anyway, it's been the most resistant to going down. But it's still moving down along with the S&P and the NASDAQ, of course, the Russell. And right now, the question is where do they kind of try to find a bottom? And usually when you get somewhere between 10 and 12%, they either hold that or they really get hammering and they might try to go down, somewhere between 15 to 20%. And that's just only time's going to tell that. If you listen to the administration, yeah, things are a little bit bad right now, but they're going to improve. Well, if you look at what happened with Trump's first administration, it's done the exact same thing. It jumped up right after he was elected. Heck, we made new all-time highs in December. There it is. And then they kind of rolled things over and they sold things off going into about March, April, and then they turned things back around, started rallying it when they found out, hey, everything's going to end up being all right. And so the question is, does history repeat itself? And historically, like I said, markets like to make lows in March, and kind of there it goes. So I wouldn't get too awful worried. I mean, you still think about it. You go back, over the past 4 or 5 years, and we've made highs and highs and highs and highs and highs. And this market is, quite high. Now, granted, inflation's a lot of that. Things cost more in dollars to get things. So, I mean, that's just kind of reflective of that somewhat. But still, an S&P up at, 6,600, whatever it was, that's a long ways up. You think about where we were back in, the 2008, 2009 time period. We were at 1,800 on the S&P when the financial debacle hit. I think it was 1880, no, in 1887, maybe it was 1587. It was 1,500. We hit 1587. It was kind of that peak that we had in that November, just before the bank started, dumping off and crashing. We went down to 666 on the S&P by 2009. And that low was set in March of 2009. And then it kind of flipped back around, and of course they went up from there. So, um, I mean, we've come up a long ways over the past, 10, 15 years, and now having a little 10% correction really isn't all that bad. Now, if you're, real young and just getting started, 30, 35 years old, and you've been buying everything you can in this market for the past 4 or 5 years, yeah, this probably spooks you a little bit. This is just another little bump in the road, before things kind of probably turn back around and start heading back up again. But it's healthy for markets to correct and kind of slosh things out a little bit. Nothing ever goes straight up, and getting a little, 10, 15% correction in the market. Okay. get it out of the way, and then kind of see where we go from there. So, but if anything, if you're still kind of worried about downside, go out and just buy some, SPY puts, a couple 3 months out. Don't pay any more than $5 for them, so you'll be way out of the money. Don't get me wrong, but the S&P can move pretty fast. As we've seen here over the past several weeks, we've come a long ways in a month's time. So that's the thing. It can move pretty quickly. Usually down markets go fast, up markets go very, very slow. And if you go back and look at all of the crashes and blah 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 blahs that you've seen over the past, you know, 40 years, all the down moves, if we're in a recession or anything like that, all that lasts no more than about 18 months. And then the rest of the years are up. And so, and this might be one of those. Now, are we going to have a recession? I mean, you keep hearing that. I've heard that now for the past 3 or 4 years, and it hasn't happened yet. So they're going to have to take a lot to convince me whether we're going to have one or not. So we'll just kind of sit back and watch and see if that happens. And if it does, we'll be geared up for it and everything like that. Just be looking for things going down as opposed to going up, and we'll kind of go from there. So, but anyway, we've got CPI and PPI coming out this week. And that's tomorrow, and the next day we'll have CPI tomorrow and then PPI on Thursday. Of course, we'll be back together again on Thursday. The CPI number is going to be more important than the PPI. They do move the market a little bit off PPI numbers. That's the producer prices, what they're paying. But the CPI numbers are really what they concentrate on. They really want to see it that. They want to see what we're paying for stuff. I mean, you can go and, eat out or something like that. It costs you arm and a leg to, just for lunch anymore. So, and that's the thing is, do our, consumer prices continue to move up? And if they do, fine. But the market will react to that. And what they're trying to really look for the numbers is the Fed going to start, cutting rates, right? You look at the JOLTS numbers that came out this morning. That's the job openings numbers. If you don't know what JOLTS is, and there's a lot more job openings. There was an increase in job openings than what was expected. So, and the market started selling off based off that news, like, oh my goodness. So they're still trying to hire people. Apparently they're not slowing down that much, right? So, and that's what they keep looking at. Good news is bad for the market. Bad news is good for the market. Because if it's bad news, the Fed's going to cut rates. And if it's good news, the Fed's not going to cut rates at all. And this market got really used to very low interest rates, and they want it back. Now, is it ever going to get back to where it was? I don't know. Odds are it won't, but you don't know. We'll just have to watch and find out and see if it can. But anyway, I don't know if you all have any questions or anything like that for me right now, but we will be back. We buy out of the money, I do out of the money. Like I said, I go about 2 to 3 months out. I've got May's, so that's April, May. It's two months out. I still have some Aprils that I did last month, so I go about 2 months out. That I go out of the money far enough that I don't pay more than $5 for them. Now you can go a long ways out and pay no more than $1 for them. Okay, don't get me wrong there, but usually the ones that are around $4, $5 in there somewhere. If the market's going to make a move, it won't get there. But the thing is, because it's the SPY, there is time value in it. Let me think about it. If you're paying $5 and it's way out of the money, that's all time value, right? But man, those puts will increase in price very, very quickly because they know that the S&P can get there very, very fast. So don't worry too much. Now, if we turn back around here and the S&P, jumps back up, and I probably wouldn't worry about it. Here we go. Really, until we get back at least above the month open, which right now that month open is sitting there at 59.67. That's a long ways from here. We're at 55.90 right now. So If it gets back above the month open, yeah, you might sit there and go, okay, they've probably been cut in half by then. Bail the things and see if this thing can continue to go back up. I look at it as insurance myself, kind of like on your house or on your car. You pay the premium, it expires worthless. You go out and buy insurance again. And that's the way I kind of look at it. I just look at it as insurance to say, hey, if this thing dies off, I've got something to protect me. And if it doesn't, fine. I bought the insurance in case it did. And it's the same thing. I mean, I would prefer not to buy insurance on my home, but it doesn't mean that, a tornado won't come through here and rip it down and now I don't have insurance, right? So there it is. So, but that's just kind of the way I look at it. What's my opinion on Canada increasing their electricity charge in the United States? You know, I heard that, Diana, and or is it Deanna? And forgive me if I said it wrong. Um, but the we shouldn't. I mean, I get we're friends and everything like that. Love friends, have no problem with Canadians. I got no Canadian friends and stuff. There it is. But the thing I don't understand is why we're buying electricity from them. We got more than enough, power generation for people to have electricity. Unless they're just, being so far green that no, we're not going to give you power anymore unless you buy it from somebody else. I mean, that just doesn't make any sense to me. But if they're going to do that, then, I don't know. I mean, the only thing I can say is probably those states are going to say, well, we need to, generate more power to offset that. And so they can do that. I mean, surely there's only not just one line from Canada into the United States in what was it, Minnesota, Michigan, and Ohio, and I forget the states that they said that was going to happen in. There's four or five of them though. And I was just like, that doesn't make any sense to me. I mean, they can move power through those states if they need to. So we'll just see what happens with that. Um, but as far as impacting our market, I don't think it'll impact our market that much at all. I mean, the utilities, you might keep an eye on them in case it does. So definitely do that. So, but I mean, it'll probably affect those things more than anything. But if you look at like the Southern Company, SO, it probably won't affect that at all. But you might look at, Ericsson or something like that, or Algonquin. It might be affecting those. So, I mean, that's the ones that I would probably be focusing on, those ones that are up there in the Midwest and the Northeast to see if it does affect them. It might even help them out. So something you might look at. Um, anyway, uh, uh, let's see. Buy puts on the, yeah, I was talking about buying puts on the SPY. That is correct. Like for insurance, definitely. Says Trump. Yeah, I mean, I have heard, and someone was saying that they just might turn it off, and as opposed to no raising the rates on the electricity. There is that possibility. And the question is can they turn it off? I mean, I mean, I assume they can. I don't know if it's as easy as just flipping a switch, or they got to do some stuff to do something. I don't know. Maybe it's just cutting wires. I don't know which it may be. So but yes, Michigan, Minnesota, New York were the main three. Okay. Thank you, Dakota. I appreciate that. But yeah, I mean, that would be pretty vicious, especially in the wintertime for them to cut power off. Now, if they want to get that nasty, okay, fine. I don't think Trump's going to take that too kindly. So I hate to make a fight with Canada, but I mean that just might make one for sure. So um, that would be pretty vicious if that happened. I can see them raising rates, to kind of spite them a little bit, but as far as cutting them off, that would just be plumb vicious and spiteful, in my opinion. And I don't think they would do something that drastic. Surely they'd say, "Hey, there's something we can do about this," and my guess is there is. So, but anyway, live in Minnesota and haven't heard anything from my power provider. Well, thank you. there we go. So all is good. All is good so far. But we'll see how things pan out. I mean, we're still in the early stages of all this stuff. I heard this morning that the cabinet was finally all passed through Senate now. So now there's a full cabinet of new folks in there. We'll see what happens and see how things go. I know that the new USDA secretary, she's been out and I don't think she's even been in the office in Washington, D.C. since she got approved by the Senate. They've had her out in every state of the union from what I can see. She started out in Texas and been up in Iowa, all over the place. So it'd be really interesting to see what she does. Uh, hold on. Next one, Trump talks about starting that pipeline that came out of Canada. Now, hold on. Back up on that one. You're talking about the Keystone Pipeline. Um, all right. So the Keystone Pipeline, between Cushing, Oklahoma, which is basically right in the middle of Oklahoma, all the way down to Bay City, Texas, that's complete. There's a lot of pipeline north of there completed. The problem is there are a couple of lakes, and of course, there's the border coming out of Canada. And the problem that the oil people, let me just say it that way, the Shells, Chevrons, who all the oil people out there, all righty, they've been bit. They started the pipeline, Obama shut it down. Trump gets in, they start the pipeline again, Biden shuts it down. They're not going to get bit again. They're not going to do it. They're going to say this is too much risk for us to get in here and start doing it again. And in 4 years, there's a new president, and they just shut us down again. And so he's getting a lot of blowback on that. And it's not Trump's money doing it, it's their money doing it. So they're probably going to win that fight, in my opinion. Now, if they want to do something different and maybe reroute something and do something else, I don't know. But I think right now there's a fight between the energy sector and the Trump administration on doing that pipeline. So it would be great for the economy or parts of the economy. I'll put it that way. I mean, you're talking about 50, 60,000 people getting hired to get that thing done, which is awesome. All right. But they got bit twice and they're not going to do it again. And I've heard that through a lot of different people that I know. And so, and those are the people that live in Oklahoma and Texas and Eastern Colorado and stuff like that. I mean, they're just like, yeah, I don't think they're going to be doing that. I was just like, well, oh, I know that they're wanting it. So there's going to be a big fight on that one. Now, if it gets done, cool. If it doesn't get done, don't be surprised at all. But I think there's going to be a fight before it gets done. And I don't think it's going to be done just because of what's happened in the past. So there it is. That's what I know. So I think I got through all the questions. Uh, oh, you're more than welcome. More than welcome. The minister said that before. Ah, okay. Okay. All right. Well, thank y'all for being here today. We'll be back on Thursday, same time. And see where the CPI and PPI went to and see what other little bumps in the road that we've kind of seen here. So, what is left for gold? I think Barry, I think gold is still on the stronger side of things. You look at what the market's done. I mean, the S&P's gone, dumped 10% here, right? Um, Gold, it ain't at the all-time highs, but it's only $60 from it. So even though it's had a hard time going up, it's not dying off. So I think gold is just kind of consolidated a little bit and corrected. And if you look historically, here we go again, or let's just say seasonally, kind of like grains and stuff, right? Usually, starting about the middle of December through February, gold and silver are actually kind of on the weaker side of things. They'll usually correct gold and silver during those couple 3 months there. And they chew around, they chop around, they end up going down and they flip around and go, they just kind of go all over the place. And that might be just their normal consolidation period. So now all of a sudden, poof, I think you're going to see, the markets on the gold side of things. I mean, you think about it, Bitcoin's been getting hammered, if you haven't seen that. People want to go over to a safe asset. There it is. And in fact, what's really interesting, I was just reading on was it yesterday morning? It was yesterday morning that there is in the past like 2 months, there's a record number of gold bullion being deposited into banks. Now, I don't know if they're buying stuff. I don't know if they're putting them in safety deposit boxes or they're using gold to buy, put into an account. I'm not sure exactly. That was just the statement that was made. Just like, why are they putting it in banks instead of, in a safe somewhere in a safe deposit box or underneath their mattress or whatever it may be? So I'm not real sure exactly what that meant. But the mint audit, that's going to be. I'm anxious to see what that does. You're talking not necessarily the mint, but you're talking about Fort Knox. It's up in Tennessee. The U.S. mints over West Point is the main U.S. mint, which is outrageous. I don't know if you go to the U.S. Mint and kind of check things out. But you go back in time, and I'll just say this. I bought a whole bunch of, silver, American Eagle silver, proofs. I bought them at $12, $13, $17, $20, whatever it is. And they came in the little plastic case and little felt little, blue case with the little eagle on the front of it and everything like that. And granted, that takes a premium. And when silver's at $10 and you're paying $15 for it, I get it. I get that. But now you look at the price of silver. Silver is trading at $33 an ounce. And you go to the US Mint right now and you look at their 1 ounce American Eagle silver coin, it's $94. Uh, you'll never get your money back out of that. I mean, $94 silver. You got to get silver back above $94 for that thing to mean it. It's a $1 coin. Granted, it's 1 ounce, but $94, that's outrageous. I mean, you can go to the coin shop in town and go over there and say, hey, I want some American Eagles. And they'll probably sell them to you for 37, $38. So, and that's the thing. Um, that's just too much money. I mean, I get it. If they want $40 for it, $41, okay, fine. And no inflation, I get that. They got to buy little cases and everything like that and have somebody to put it together. Got that part. But $94, that's outrageous. So, but as far as Fort Knox is concerned, that'll be a really interesting little inspection. I mean, granted, are all the bars there, but they're just lead bars that are just coated in gold? That's my facetious side of things, right? Or is it, just all there like it normally should be, and it's just a moot thing. I lean toward all the gold's there. There's no reason for it not to be there. There it is. But you don't know. I mean, if it hadn't been inspected in 40 years, who knows what's there and what's not there? I mean, dang, that's just nuts. I mean, at least people, every 5 or 6 years, go check their safety deposit box and make sure the stuff is there, right? I haven't been there for a long time. I might want to go check that out. So, but yeah, that's the thing. That's kind of ridiculous. Now they get a report every month or every quarter or something like that of the gold holdings that we have there, but unless you go and check it out, you don't know. So I don't know when that trip is scheduled. It'll be interesting to find out. So, alrighty. Well, we'll see you all on Thursday, at 2 o'clock and see how the inflation numbers come through and how this market's going to end up. They're going to ricochet from here or they're going to go down some more. We'll find out. So, uh, but thank you all for being here. And you all be safe out there and stay warm, and we'll see what happens. Thanks for having me.